Tesla stock is on a tear today. Ladies and gentlemen, at the time of recording this video, Tesla stock is up over 6%. What's going on and what do you need to know? We do have some statements of news from Elon Musk that I will share in this video also. But really, the big story is initial jobless claims and retail sales. So first up, retail sales month over month came in at 1%. Last month, you were revised from 0% down to negative 0.2%. So last month seen a downward revision. This month beat by quite a margin. We were expecting 0.3%, so that was quite a beat, even including the revision from last month. Really, that would have been like positive 0.8%. That still was much better than the estimate. If you exclude autos month over month, then you came in at 0.4%, which did beat the estimate of 0.1%, but again, not as strong as I guess the headline number suggests. So I actually think a lot of this move today is being caused by initial jobless claims. Initial jobless claims was the big catalyst last week that came down, that gave us the best day for the S&P in over a year. Initial jobless claims today came in at 227,000. We were expecting 235,000. So this is definitive kind of real-time data suggesting the labor market is not falling out of bed. There is not this mass wave of unemployment that is starting at least right now. And this is 2 weeks now of initial jobless claims coming in lower than expected and actually declining. And that's not what you see when we're actually going into a recession. You also did get continuing jobless claims that came in lower than expected, but still high. I mean, you're still sitting at almost the highest level that you have been at. So not as much improvement there, but I think the markets are more concerned with initial jobless claims than continuing claims. You got export prices, import prices year over year. We'll take a look at just a second at your GDP update for Q3 per the Atlanta Fed GDP Now tracker. But you did have Philly Fed business conditions that came in at 15.4. Last month was 38.7, so that was really bad. CapEx index actually went up to 12 from 7.4 last month. So that's I guess good. Companies spending more money, that tends to lead to growth. Philly Fed employment came in at negative 5.7. Last month you were 15.2. So that's a big miss. Philly Fed new orders came in at 14.6. Last month was 20.7. So that was a miss. And Philly Fed prices paid came in at 24. Last month was 19.8. So Philly Fed data was a lot worse than the data that we got with retail sales and initial jobless claims. But of course, that's regional data, so the markets did not care too much. You did have Fed Mausoleum that spoke today, did not do much of anything for markets. Industrial production month over month that came in at negative 0.6%. The estimate was negative 0.3%. So industrial production actually fell quite a bit, and that could be a contributor to lower GDP expectations for Q3. Business inventories came in line with expectations of 0.3%, and the NAHB housing market index came in at 39. You were expecting 43. So again, not great. We do not have a new updated Atlanta Fed GDP Now update for Q3. You will be getting this at some point today. It could be later on tonight. I'll keep you guys posted if we do get this here coming soon. It looks like GDP estimates are going to fall based on the data that came out today. Nonetheless, really this pushback towards a recession, specifically with initial jobless claims. Retail sales also helps, but initial jobless claims is easing a lot of those concerns about the labor market that markets have had in recent weeks, is really helping to push Tesla stock higher. Today, Tesla is up 6.3% at the time of recording this video at $214 per share. This was my end of the week price target for Tesla around $215. So we have another $1 left to go. But I pretty clearly stated if things go well this week, Tesla's probably going to see a move close to about 215. It's possible you could hit 220 if tomorrow's data also comes in good. We'll talk about that a little bit later throughout this video, as well as in the video coming out at 8 p.m. tonight. Then you could see an even larger run for Tesla. But Tesla is an interest rate sensitive company. It's an economically sensitive company. It really stands to benefit from inflation falling, the Fed cutting rates, but also the economy holding up. So the economy is the number one most important factor for Tesla. It's not the Fed's path of rate cuts. That really doesn't matter too much for Tesla in the near term. In the near term, it's all about the economy. And Tesla reacts very strongly to economic data. And other economically sensitive companies, even in the land of big tech like Apple and Amazon, are also moving higher. Apple's up 1.3% today. Amazon's up 3%. So Tesla's over 6% move is definitely going to catch a lot of Wall Street's attention today. Warren Buffett's Berkshire Hathaway's 13F filing is out. Warren Buffett buys Alta and Heiko and slashes their Apple stake. Overall, in the last quarter, Berkshire sold $77.2 billion in stocks while purchasing only $1.6 billion, increasing its cash reserves to $276.9 billion. Elon Musk comments on this and says 277 billion cash reserves is wild. That will change as the T-bill return drops. The real question is, when does Warren Buffett buy himself some Tesla? At least a small position would, I think, even make sense for Warren Buffett. Hallmark's catalog posts this image of the free cash flow history of pure EV makers, and I mean, it's bad, right? Lucid's negative 10.4 billion, NIO negative 8.4 billion, VinFast negative 6.8 billion, XPeng negative 3.8 billion, Polestar negative 6 billion, and others that are either bankrupt or soon to be bankrupt. You can see Tesla's up here, the only one positive, and they did go positive free cash flow wise. What looks like 6 to 10 years into their business. So a lot of these companies that are just bleeding cash are not there yet. Lucid's got another at least 2, 3, 4 years before they're to the point where it just improves. Not even goes positive, but improves. It took Tesla 12 years to be free cash flow positive. At that pace, nobody else is going to survive. Then Elon Musk comments on this, and he puts it really simply, as Elon does a lot of the time. Any car company that fails to solve self-driving will die. So again, just to make matters even worse as far as trying to be profitable or even just have free cash flow for these other companies, you have the added problem of trying to solve full self-driving. And that's just not even, in the realm of possibilities at this point for any of these other companies. And I think that's why Tesla is in such a dominant position, because these guys, they're going to have no choice but to license Tesla's FSD technology. Even large car companies, for that matter, Tesla has always had the advantage of putting the hardware into the cars, the extra cameras and whatnot for FSD up front. So they don't even have to go back and do that. If GM, Ford, or others wanted to create a self-driving, software and put it into vehicles, they would actually have to take those vehicles back and put a chip in them, like put the actual hardware in them to make it even possible. Like at this point, you're just so behind the curve for all of these, automakers at this point. The only logical way out of this is to license FSD technology from Tesla. And I really think that's just a matter of time. Lucid CEO Peter Rawlinson suggests that it will take Tesla until 2032 to match its current EV efficiency. He says Lucid has a significant EV technology advantage. If the closest competitor were to continue their rate of progress, it would take many years to match Lucid today. And to give credit where it's due, I think Lucid does make a great car, but the problem is the business is not going to be able to survive until they can get the cost down enough where average people can actually afford to buy one. And I guess this just happened to be like the worst time possible to start a more luxury EV company because of the way people are pulling back. The inflation that is seen out there is more like 50%. It's like 50% more expensive just to live these days. And people are cutting back on what, you know, kind of bread they buy and what kind of meat they buy, let alone what kind of car they buy, if they even buy a car in general. So I think Lucid's at a massive disadvantage for many years until they can get the cost down on their vehicles. And really, if they can't get the cost down on their vehicles, then the path for Lucid does not look good. And apparently Gavin Newsom lied last night. He said, quote, "Our nation's leading energy efficiency program allows me to lay claim to this fact. California has lower residential utility bills than states like Texas and Florida that tout or mislead you with information. In fact, Texas and Florida residential utility rates, cost per kilowatt hour, are on average 50 to 60% lower than California. Having said that, renewables are the cheapest form of power today, and we should continue to invest heavily in that area." It is being reported that Tesla has made some pretty big improvements in their second generation 4680 battery cell, which currently goes into the Cybertruck. The cell can is 30% lighter and 33% thinner, which reduces the entire battery pack weight by about 10%. Which, just one advantage of that would be less weight in the battery pack could mean more miles that you actually get driving the Cybertruck. Commercial battery energy storage is currently cheaper than at any point in history. Tesla's megapack prices have fallen about 50% from their all-time high in 2023. Electrify Expo, North America's largest electric vehicle festival, today announced that the Tesla Cybertruck will be available to demo drive for the first time, exclusively at the festival stop in San Francisco Bay Area, taking place August 24th through August 25th. A Tesla semi-truck is spotted today loading cars at Fremont's outbound lot. In July, the Tesla Cybertruck was the best-selling vehicle in the U.S., priced over $100,000 for the second month in a row. U.S. Defense Department spokesman Kirby says, "We have info that an Iran attack could come with little warning." Simple translation, they don't know anything. And again, at this point, any drama in the Middle East, I really don't think affects our markets too much. I really don't think that is something that would give us material downside at this point. Maybe last week, sure, but today's retail sales, more importantly, initial jobless claims, really does solidify things are doing just fine out there. But yes, I do think the data is incredibly delayed, and what we're actually seeing in the economy today may not be reflected for multiple months down the line. So keep that in mind. But from the market's perspective, this is a very risk-on kind of environment now. And the next big worry is going to be the next big set of economic data. I also think the election and specific election outcomes can start to affect the markets here soon as well, like some tariff policies or other things, potential tax implications. So the election is still something that I think we need to have our attention on, but not too much, because in the end, it's all about the economy right now, really for the next couple of months. Option activity from big money today via Ortex's interesting flow sentiment is showing 19 different trades totaling $5.07 million with a positive order value of 78%. Heading into this Friday, open interest on the call side is 62.67%, and open interest on the put side is 37.33%. So there is almost 2 times as many calls compared to puts. Tesla's short interest of free float is sitting at 3.12% short interest of free float. $17.48 billion currently sold short in Tesla stock, totaling $86.8 million shares. If you take a look at today, you have return shares of 652,000, borrowed shares of 73.4 thousand. So that means on net today, you're seeing 578,000 shares actually being covered on. So again, shorts are covering on Tesla. And they're doing this on red and green dates. It seems like lately it's like a flip was triggered and shorts just want to all of a sudden get out of their Tesla short positions. I don't know about you guys, but whenever I see shorts covering, it tends to be a good sign, especially when every day you're seeing millions of shares get covered. Even on really bad days for the stock is even more telling than days like today where Tesla's doing well and shorts are covering. That makes a lot of sense. But when Tesla stock is down like it has been in recent weeks, and you've seen, 20 plus million shares actually get covered, that's a really good sign. Nonetheless, Google Trends data for the Tesla lineup looks pretty dang good. The Cybertruck's falling the most from 73 to 63. The Model Y is at 26. The Model 3 is at 24. The Model S at 10. And the Model X is at 8. These levels are trending upwards for the Model 3 and the Model Y specifically. Sentiment over on StockTwits shows investors are bullish on Tesla with a sentiment score of 61. Yesterday, the sentiment score was bullish at 72, so a little bit less bullish today than yesterday, but still looks pretty good. Message volume today is high at 56. Yesterday, it was normal at 49, so message volume's a lot higher today, and the participation ratio is high at 55. Google Trends data for full self-driving remains very strong at 20, which is higher than where we trended before this free trial for FSD started, and you're still staying in the 20s. A couple different moments we have hit 18, especially as the data is getting more finalized, but really you're trending in the low 20s, and that's just great. That suggests there is a higher take rate now for full self-driving than there was in years prior. Other big catalyst this morning was Walmart earnings. Now, Walmart beats estimates, raises outlook as it sees a stable consumer. The discounter raised its full-year outlook on strength in the first half of the year and said it has seen steady consumer health, but was more cautious about the second half. They say, quote, "In this environment, it's responsible or prudent to be a little bit guarded with the outlook, but we're not projecting a recession." He said Walmart has not noticed a shift in consumer behavior. He said every month of the quarter was relatively consistent, and the back-to-school season is off to a pretty good start. "We see among our members and customers that they remain choiceful, discerning, value-seeking, and focusing on things like essentials rather than discretionary items. But importantly, we don't see any additional fraying of consumer health." They also say it stands to reason that customers are shifting to prepare more meals at home versus eating out. So really, we didn't get much new information, if you will. Nothing really changed. The same things are continuing to happen. People are not buying as many discretionary items. They're focusing on essentials, and they're still buying essentials. Like that has not changed. So I don't think we got the all clear that the economy is just fine. In fact, Walmart sounds a little cautious on the second half of this year, but we also did not get any indications that things are immediately going to crap either. And Walmart stock is up about 7% today, and I would argue that is having a positive impact on markets as well today. And now, following the data that we got out today, there's a 73% chance of only a 25 basis point rate cut coming September 18th. Only a 27% chance of a 50 basis point rate cut. So in fact, if you're an investor in our markets, you actually want only a 25 basis point rate cut, because rate cuts are not bullish for markets historically. The reason why the Fed is cutting rates is what makes markets either bullish or bearish. If the Fed is forced to cut aggressively because the economy is going to crap or the labor market is going to crap, then that's not good, right? Stocks are going to sell off on that. If the Fed is able to just slow and steady cut rates because the economy is doing just fine and they're just trying to normalize things after inflation has come down, then that's a much more bullish potential outcome for markets. So in fact, 50 basis points is bad and 25 basis points is good. Now, we do have a lot of data between now and September 18th. We have another CPI report coming out around September 11th. The next Fed meeting is September 18th. We have the Jackson Hole Economic Symposium that happens, I believe, next week, August 22nd. Yeah, that's going to be next Thursday, if I'm correct there. You're going to get consumer spending data. You're going to get I believe another round of retail sales data, all kinds of different data between now and September 18th. I mean, we still have 4 weeks, 6 days, 3 hours until the next Fed meeting. So call it 5 weeks from now, you're going to get the next Fed meeting. It could still go either way. As far as 25 or 50 basis points, the incoming data will fluctuate these odds day by day. 10-year Treasury yields are jumping sharply today following this better than expected data. 10-year Treasury yields are up 11 basis points today to 3.93%. Now, coming tomorrow morning, you will get Michigan consumer sentiment data as well as building permits. That is going to be the most important, that Michigan consumer sentiment data, especially current conditions and inflation expectations. So that's what markets are going to pay attention to coming tomorrow to see if consumer sentiment is holding up or getting worse. And that's going to be the next big catalyst to move markets. At this point, Tesla is at $215 per share, as I forecasted by the end of this week. So Tesla's price target was hit for this week to the upside. I do think it's possible Tesla could run even to the 220s coming tomorrow if that data comes in good tomorrow morning. But we will talk about that a little bit more in the next video. You did break above that 50-day moving average at $212.82 per share. It looks like you got a little bit of resistance around 215.81 today. That is right there at your 20-day moving average. So that's pretty interesting, like almost literally down to the penny. You found resistance there. You're also barely above this first downtrending line of support or resistance. Looks like it could be resistance at this point. You're still above that, so we definitely want to see how we trade into the close around these levels. It is possible around 215.80 or so, this 20-day moving average could be a little bit of a short-term top, although I think really the data could send us higher than that heading into tomorrow. But so far, things look really good for Tesla on a technical basis. I do want to remind you that we had a golden cross here not too long ago on July 29th that in fact did not play out as we expected. Tesla stock ended up falling a lot as the broader markets did at in the week or two following that. And golden cross is when the 50-day moving average breaks above the 200-day moving average. That does tend to lead to aggressive rallies historically, so maybe we get that golden cross effect here over the coming days or weeks. I am just a little concerned about how fast we are already marching back to the highs. We're getting pretty close to the highs. We're only about $14 off of a new all-time high for the SPY. I think a lot of this bounce has just happened too quick, and I think there's going to be a lot of volatility throughout the month of August. So I don't think it's going to be straight up, but if we continue to get good data like we got today, that could definitely fuel some optimism in the short term until we get bad data. And at this point, a strong economy, the Fed about to cut rates, Tesla's profitability will then start to improve, and hopefully demand will start to improve organically. Tesla will not have to buy down the interest rate as much as rates come down, again directly boosting Tesla's profitability. These are strong tailwinds for Tesla stock, and that's why Tesla is ultimately outperforming today. The only thing that really matters for Tesla is the economy. If the economy does well, Tesla's going to do well, especially with the other backdrops like the Fed able to cut rates and all of that. If the economy does poorly, Tesla's going to do poorly, and Tesla stock is going to do even worse. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.